My stock portfolio has done over 120% in the last 4 years, and this has come from strictly investing in the US stock market. In this video, I'm going to teach you how, as a complete beginner, you can start investing in US stocks from whatever country you are in the world. Hi, my name is Onyeka, and on this channel, we talk all about getting better with your money. I'm a qualified accountant with over 10 years of experience in finance. So let's talk about stock market. What is the stock market? The stock market is a secondary market where shares are bought and sold. You might be thinking, well, what are shares? Well, stocks are units of a company. So imagine that you're a business owner. You start a business today, and as a business owner, you own 100% of that company. Now, suppose sometime in the future, maybe 10 years down the line, you decide, well, I need more capital to grow my business. You need more injection of money into this business. You can do that in a couple of ways. One, you can find this cash yourself. So you can get angel or VC investors to pump in money into your business, or you can float your business in the stock market. By doing this, you open it up to the public to come and invest. So for each unit of share someone buys, you lose that same unit of share as an owner. So you might end up having maybe 1,000 shares, right, of which you were the 100% owner. But by putting on the stock market, you might decide to give away 500 units of your shares to other people to invest in. So whoever invests in your company becomes a part owner of the company. That's exactly what it means to become a stockholder. You become a part owner of the company that you buy into, right? So that's exactly what the stock market is for, and why companies float their businesses on the stock exchange. How does the stock market make you money? Well, there are a couple of ways you can make money out of investing in stock. One is through dividends. So when these companies use your money to run their operations and they make a profit, they can take a portion of that profit to put back into the company to keep generating more income. And they might take a portion of that same profit too and distribute it to shareholders. So this means that you are getting rewarded by holding stocks in the company. So you're not just a share owner, you are also going to enjoy part of the profits of those companies. And this is really for all kinds of companies. Tech companies like Apple, Microsoft pay dividends, all right? Companies like Intuit, accounting softwares, they pay dividend. Even index funds often pay dividends to invest in through ETFs. The second way you can make money by investing in stock is through capital appreciation. And what this means is that, assume for instance that you invested $100 into the company. At the time you bought this company, maybe one share was worth $100. So you just bought one unit of the company, right? And then a couple of years down the line, that company's share price goes from $100 to, let's say, $250. You still own the same one unit you have, but your one unit no longer costs $100, but now worth $250. So your share has appreciated by 150%. That means you have gained $150 extra just by holding one unit of this company. All right. So you can make money in the stock market through dividends and through capital appreciation. There are often some companies that give you both. They're not so common, but most high growth companies tend to not pay dividend, but would give you capital appreciation opportunities. And most companies that pay dividend may give you more stability in prices, but at least you get that money coming in regularly. In the US stock market, you often tend to get dividend sometimes quarterly, but there are companies that also pay just twice a year. What country's stock do you need to buy? So most countries actually have their different stock exchange. If you're watching this from Nigeria, then there's a Nigerian stock exchange. The US has the US stock exchange. Japan has the Nikkei. London has a London stock exchange. Many companies have stock exchanges. And you can buy shares to give you international exposure into different countries, or you can simply buy it in a single country. Most people would advise that you buy shares in the US market because it is the largest market in the world. And most companies would list their shares on the US stock market. So you definitely want US stock exposure, right? And that's where you find companies like Apple, Microsoft, Meta, Google, Berkshire Hathaway, Nvidia, the big brands you typically use every day. You will find them on the stock market. How can you invest in the stock market? I would say that one of the wonders of modern times is really having access to mobile applications that give you access to companies all over the world. So with apps like Bamboo, Trove, Chaka, Afri Invest app, Optimus by Afri Invest, you can actually invest into the US stock market. But I'm definitely going to recommend Bamboo, and that's what I'm going to use to show you a demo. If you're liking this video so far, can I just ask you a favor? please hit the like button and subscribe, all right? And let me know in the comment section what other information about the stock market you would like to know. I will give you a demo at the end of this video, so do hang around to see that. How much do you need to invest to start investing in the stock market? The truth is, whatever it is you have, when it comes to the US stock market, with as little as $10, all right, you can start investing in stocks. When I began my investing journey in 2020, I would put just whatever it is I had, whatever the exchange rate was, I would just buy whatever dollar that amount could afford and put that on the market. And really, year to date, or at least from then to now, I've pretty much doubled my investment. My total cost basis was about $2,500, but currently my portfolio is worth over $5,000. And really, when you think about it, that already makes me a millionaire, by the way, Naira. So if you're sleeping on the stock market, I feel like you're sleeping on so much money to be made, so much wealth to build. One of the reasons you should think about investing is the fact that it will help you grow your wealth in a reasonable way and give you something that you can fall back on when you get to retirement age. With the stock market, you definitely want to start investing early, not late. So start today and start doing it consistently over time. Again, you can start with as little as $10, but the important thing here is to do it consistently and often enough. So even if you have only $10 per month, every month put in that $10, all right? The other question you might have to ask is, do you need to just buy one full unit of a company? Yes and no. For example, Apple shares worth $242.69 at the day of making this video. But even if you have only $50, you can buy $50 worth of Apple share. This is what we call fractional investing. Fractional investing allows shareholders anywhere to actually buy little chunks of a company's stock. So as little as 0.3 units you can buy. And you know what's so great about this is that if you keep putting that little amount of money into that particular stock, with time you're going to end up owning a whole unit of the share. And if the company ever does a stock split in the future, you could be a huge beneficiary of that. I'm going to use an example of something that happened to me. When I began investing in 2020, the first stock I bought was Tesla, and I had just zero point 0.4 units of Tesla shares. Today, I have about 6.9 units of Tesla shares, and I don't have that because I bought more shares. I have that because all through the time Tesla shares kept growing, and they had multiple stock splits over the years. It just meant that for each share I had, they gave me more. And so I ended up going from 0.4 units to 6.99, almost 7 units of Tesla shares, all right? And this stock alone has done almost 400% in the last 4 years. So fractional investing is a way to go. And you should think about investing consistently because compounding really does so much when it comes to investing. I'm going to give you an example of how compounding works. So let me go to my laptop. So here is an example of how compound interest works. This is a compound interest calculator. It's so easy to get this, by the way. If you just come on Google, you can simply type compound interest calculator, and you have a series of them. I'm using the one from investor.gov, but NerdWallet is another really nice one that I tend to like, so you can use that too. So imagine that your initial investment was, I'm going to use $100. Okay, let's use $10 because I mentioned that in the video. And your monthly contribution is $100. If you invest this for, I'm going to use 5 years, 10 years, and 15 years to give you this example. So you just understand how compound interest works, okay? If you do that for 5 years, if you invest in a broad-based ETF like the S&P 500, you would have about 10% annual return, okay? And it compounds annually. This is what you're going to have. In 5 years, you would have invested $6,010 and you would have $7,342. All right. So there is almost over $1,000 worth of gain in this. Now imagine that you did this for 10 years, okay, at the same interest rate. Now you would have invested $12,000, but you would have gotten $19,150. That's over $7,000 worth of compound gains in 10 years, right? Remember, in 5 years, you had just about $8,200 gain. An extra 5 years made it 7,000 plus. Now we're going to increase that time to 15 years and recalculate. Same amount, by the way, every year. You notice the gap here. Now there is even more compound growth. You've gone from contributing only $18,000 to having $38,000. That's over $20,000 worth of compound growth in 15 years. So compound interest does so much magic when it comes to investing. And this is exactly why you need to start now. Start early and do it consistently. Because imagine that you started investing at the age of 50 and you're retiring at 65. You have just 15 years to build this wealth. If you start at 30, you have over 35 years. And if you start at 20, you have over 45 years if you're retiring at 65 to build wealth. So the more time you spend in the market, the more time you have to grow your wealth. All right. So that's what you need to know about investing in the stock market. So now I'm going to show you how to do that using the Bamboo app. First, go to your mobile app store and search for Invest Bamboo and then download the app. All right. So once you've done that, so now you can see the homepage of Bamboo. On the homepage, you have at the top here, there's a couple of information. You see your total wealth, which is how much you have invested. This is my portfolio, and I have about $5,500 inside it. Here you see that I'm invested in US stock. So on the Bamboo app, you can invest in US stock, Nigerian stock, fixed returns, and treasury bills. Right. For the US stocks, this is what I have in my portfolio. Just Apple, Intuit, Coca-Cola, and the rest. And you can create your watch list, by the way, too. And then this is how you fund your account. So if you want to fund your US dollar account, especially if you want to buy US stock, you're going to click US wallets here, right? And then at the top here, you'll see deposits. So click on deposits. You can see the Naira equivalent, by the way. Exchange rate currently is 1,549 Naira per dollar. So if I wanted to invest, for example, just 10,000 Naira, all right, I'll click that. And you see that comes to $6, by the way. So if I want to invest at least $10 to start investing, I'm going to click here. This is $10. That's 15,000 Naira. Okay, so you need to invest at least 15,495 to get $10 worth of investing. And then you click deposits. You decide if you want to use your US debit card to fund it or a credit card. This is for those who have US dollar cards. And then you can put your card details and fill that up, okay? And if you don't have a US dollar card, I'm going to show you how to do this in Naira basis. So you can come here and then click NGN wallet instead. Click deposits. And then you can put your 15. I'm going to make this 16,000 just to use a round figure. Put 16,000 Naira. The US dollar equivalent is $10. Okay, so I'm going to deposit that. You can do through direct bank transfer or your Naira debit or credit card. If you do debit or credit card, it's going to give you the option to put the card details. And if you pick the Naira direct transfer, it's going to give you a bank account. Be sure that your bank account is correct, by the way, when you decide to use this option. So your account is actually credited, okay? There are fees involved, obviously, but it's not so much. And then once you funded your account, then this is how you buy your stocks. You go to the bottom here and click invest. So if I want to invest in US stocks, I'm going to click US stocks and you see the range of stocks here. All right. Let's assume I want to buy more shares of Apple. I'm going to click on Apple. The market is closed currently, but the market typically opens on weekdays between 2 p.m. and 9 p.m. But once it's open, you're going to see on the app that the market is open. And when it's closed, you should see market closed just like this. So you're going to click on that. And then you can click buy. Now you can set how you want to buy. If you want to buy every month, it means you just need to have that money deposited in your wallet, and then on a monthly basis, it gets automatically invested into the assets you picked. I'm not going to do buy every month. I'm just going to pick a buy now. And I have $10. I'm going to put $10. By the way, my buying power here just says $6. So let me use that. If I want to invest the $6, I'm going to click that. And you can see at the top here, it tells you how many units of shares it gives you. So this is 0.024 units of shares. But trust me, having $6 worth of Apple share is really better than having zero worth of Apple shares, okay? So don't think too much about how many it's giving you. The point is to consistently do it, and that's going to build up over time. And then you click review other. Right, so this is the estimated amount, $5. Estimated commission, they will take platform charges $1, and then total amount is $6. And then you can click place order, and it's going to affect the purchase. So since it's a weekend for me right now, it's not going to affect this until the market opens on Monday. And that's how you can buy your shares. And when you come to your homepage, you're going to see all the shares that you own under each category. So the market is really good for people who want to be long-term investors. And by long-term, I mean upwards of 5 years. So if you really do not have the patience to buy an investment and leave it alone for a long period of time so that one, compound interest can do its work, and two, so that it can appreciate in price over the years or pay you dividends over the years, then the stock market really isn't for you. There is also price volatility, which means the prices may go up and down, and you need to get comfortable with that, which is why dollar cost averaging is good. Regardless of the price, if you're buying on a monthly basis, just keep putting in the exact amount you want to put in monthly into the shares you want to buy. Of course, you might want to ask, how do I know what shares to buy? There are a number of things about fundamental analysis you still need to learn. Quantitative analysis, where you go into the financial statements, look at the balance sheet, the cash flow, the income statements, and the qualitative analysis, where you need to think about who's running the company, who are the directors, what are their visions and their plans for the company, what's the brand credibility of this company, etc. I will talk about some of this in a different video. Let me know if this is something you want to see on the channel, how to pick your stocks, and just tell me in the comment section how to pick stocks, okay? And I'll make a video for that. And then something else you might also probably want to think about is investing through index funds. If you also want to learn about that, let me know in the comments, say index funds, and I'll also make a video for that. We got to make this a series, by the way. So that is about stock investing today. If you feel like the stock market, by the way, is not really your cup of tea because you cannot deal with the price volatility, or you want to invest for the short term, maybe upwards of 1 to 2 years, then you might want to take a look at mutual funds. I have an entire video about investing in mutual funds. I'm going to link it up here, so go watch that next. Before you go, please like this video, subscribe, and share with someone who also needs to see it. Thank you so much for watching, and see you on the next one.